Dear students and viewers, I welcome you with another exam style question on the subject of financial accounting. This question will test your knowledge and make you learn the concepts of double entry bookkeeping. Zenith School of Accountancy is committed to providing free learning to students from all walks of life. To watch other exam style videos, please explore my channel's playlist. Please also subscribe to my channel to stay informed about new videos. Today's question is, which of the following will not result in a debit entry in the accounts? Option A, decrease in liabilities. Option B, increase in revenue. Option C, increase in assets. Option D, increase in expenses. This question tests your knowledge of double entry bookkeeping. Those of you who are already familiar with the principles can immediately find the correct option. However, for those of you who are not familiar with double entry bookkeeping principles, let me quickly explain these principles. We need to remember that all accounting transactions may be grouped into four broad categories. These categories are 1. Business assets such as plant and machinery, accounts receivable, and inventory. 2. Business liabilities such as debts and loans. You also need to remember that equity is a special type of business liability. It is the money that the business owes to its owners. 3. Business expenses such as rent or gas expenses. 4. Business revenue or income such as income from the sale of merchandise or services. You may already know that assets and liabilities, including equity, are shown in the balance sheet of the business, while income and expenses are shown in the income statement of the business. You also need to remember that a double entry bookkeeping principles treat business assets and expenses as one group of entries in relation to debits and credits, while business liabilities and revenues as another group of entries. To put it differently, assets and expenses are treated as opposite to liabilities and revenues of a business for double entry bookkeeping principles. Based on this accounting convention, there are 8 principles of double entry bookkeeping that every student of accounting must remember. For better comprehension, I have divided these 8 principles into 4 broad categories. First category relates to business assets, and the double entry bookkeeping principles for recording business assets are: 1. An increase in assets will have a debit effect. 2. While a decrease in assets will have a credit effect. A simple example will illustrate these principles. Suppose a business buys a new plant and machinery for $10,000, making payment through its bank account. In this case, the business is increasing the assets of plant and machinery by $10,000 while decreasing the current assets of bank account by the same amount, that is $10,000. The debit and credit affecting these assets will be recorded as: will debit plant and machinery account by $10,000, that is increase in plant and machinery as an asset, and we will credit bank account by the same amount of $10,000, that is decrease in bank asset. The second category relates to business liabilities, and the double entry bookkeeping principles for recording of business liabilities are: 1. An increase in liabilities will have a credit effect. 2. While a decrease in liabilities will have a debit effect. I will explain these double entry bookkeeping principles with another simple example. Suppose a business has paid its accounts payable of $500 by making cash payment, while another business has obtained a cash loan of $5,000 from the creditor. Payment of accounts payable will be recorded by debiting accounts payable as $500, that is decrease in liability, and we will credit cash by $500, that is decrease in asset. Obtaining a loan of $5,000 will be recorded as will debit cash by $5,000, that is increase in cash asset, and we will credit loan by $5,000, that is increase in loan liability. The third category relates to business expenses, and the double entry bookkeeping principles for recording business expenses are an increase in expenses will have a debit effect, while a decrease in expenses will have a credit effect. Under normal circumstances, business expenses keep on increasing. However, in a rare case, a business expense may have been recorded on the higher side that may need adjustment. Based on this assumption, suppose a business has to pay $750 against an invoice for the freight charges. It will be recorded as will debit freight expense by $750, that is increase in freight expense, and we will credit accounts payable by $750, that is increase in accounts payable liability. Now assume that later the business realizes the actual amount of freight charges was only $550, implying a reduction of $200 in freight charges expense. This will be recorded as we will debit accounts payable by $200, that is a decrease in accounts payable liability, and we will credit freight charges by $200, that is decrease in freight expenses. I repeat it, we will debit accounts payable by $200, that is decrease in accounts payable liability. Instead of $750, now it's only $550, so difference is $200. So we are going to give it in fact by debiting accounts payable by $200, and we will credit freight charges by $200, that is decrease or reduction in freight expense. The fourth category relates to business revenues and income, and the double entry bookkeeping principles for recording business revenues are an increase in revenues or income will have a credit effect. The income of a business will be credited, while a decrease in revenues or income will have a debit effect. So if a reduction in income is to be recorded, it will be debited in the books of accounts. Another example will highlight the application of double entry bookkeeping principles for revenue transactions. Suppose a business has sold merchandise for $1,000 on credit. This transaction will be recorded as we will debit accounts receivable by $1,000, that is increase in accounts receivable asset, and we will credit sales revenue by $1,000, that is increase in sales revenue or income. Suppose later the customer returned goods worth $50 as faulty goods. This will result in reduction of revenues by $50, reducing the overall income to $950, and it will be recorded as we will debit sales revenue by $50, that is decrease in business revenues, and we will credit accounts receivable by $50, that is decrease in accounts receivable asset. If these 8 principles appear to be daunting to some of you, then there is another way to remember these 8 principles of double entry bookkeeping. This shortcut is 1. An increase in assets or expenses will have a debit effect. 2. An increase in liabilities or revenues will have a credit effect. 3. A decrease in assets or expenses will have a credit effect. 4. A decrease in liabilities or revenues will have a debit effect. These 4 rules of double entry bookkeeping can be summarized as follows. Rule 1. Business assets and expenses follow the same double entry bookkeeping principles. Rule 2. Business liabilities and revenues follow the same double entry bookkeeping principles. This summary will never let you forget the 8 principles of double entry bookkeeping principles. Based on these principles, it is evident that option B, increase in revenue, is the correct answer, because this is the only option that will result in a credit effect, while all other 3 options will have a debit effect. If you have enjoyed this video, please do subscribe to my channel. Click the bell icon for notifications, and also share and like this video. Thank you for watching.